Welcome to United UK, your go-to source for breaking news and in-depth analysis on global markets. Today, we're diving into a whirlwind of financial turmoil, escalating trade tensions, and geopolitical shifts that are shaking up the world stage. Before we begin, make sure to subscribe and hit the notification bell so you never miss an update. Europe's trading day amid global tensions. European markets have just opened their trading day with a palpable sense of unease. The ongoing crisis in Ukraine continues to weigh on investor sentiment as recent developments in Washington, most notably the pause in U.S. military aid for Ukraine, add to the uncertainty. This geopolitical backdrop has given a boost to European defense stocks, with investors keenly watching how these market shifts might unfold. Tariff turbulence. U.S. trade moves on Canada, Mexico, and China. In a major twist to the global trade landscape, former President Trump has reiterated his stance on tariffs, leaving no room for negotiation. Starting at 5 GMT today, the U.S. has imposed a sweeping 25% tariff on all imported goods from Canada and Mexico. In response, Canada has already vowed to retaliate with tariffs on $155 billion worth of U.S. imports, with the first $30 billion rolling out immediately. Meanwhile, the trade war escalates further with China now facing an extra 10% tariff, on top of an earlier 10%, bringing the total on Chinese exports to at least 20%. Beijing wasn't silent either. Chinese authorities announced their own counter tariffs ranging between 10% and 15% on various U.S. products, set to take effect on March 10. Not surprisingly, these drastic measures have rattled U.S. stock markets, with major indices like the Nasdaq and S&P experiencing sharp declines following the news. Insights from the front lines, reactions from North America. Trump's message. In a forceful statement, President Trump made it clear there's no room left for Mexico or Canada, and the tariffs are set to go into effect. This uncompromising tone has intensified the trade dispute, leaving markets and policymakers scrambling for responses. Mexico's response. Following the tariff announcement, the Mexican peso tumbled by around 1%. Former Deputy Trade Minister Juan Carlos Baker noted that while Mexico has long hinted at having a contingency plan, concrete details remain under wraps. Analysts expect an official reaction soon, possibly mirroring Canada's retaliatory measures. The impact is especially significant for American companies with operations in Mexico, as they may need to reassess their manufacturing strategies to cushion the blow from these new tariffs. Canada's economic outlook. Across the border, senior economist Moshe Alanda from Concordia University cautions that these tariffs might push Canada toward a recession. With an upcoming election and political uncertainty on the horizon, Canadian markets are bracing for tough times. Alanda also pointed out that long-standing issues, ranging from border security to restrictions on U.S. investments in sectors like agriculture and telecommunications, could further complicate the nation's response to these trade challenges. China's countermeasures and Asian market ripples. In Beijing, the reaction was swift. Chinese officials announced additional retaliatory tariffs on selected U.S. products, signaling their readiness to escalate if the trade war intensifies further. However, China faces its own set of domestic challenges, including sluggish growth and a protracted property crisis, which might dampen the effectiveness of these countermeasures. In a bid to bolster future growth, Chinese leaders are pivoting towards investments in high-tech sectors such as artificial intelligence and renewable energy. Asian markets aren't immune either. Japan's main index saw a drop of over 1%, and European investors are shifting their funds into safe haven assets like sovereign debt as uncertainty looms. Domestic impact. Tariffs hit home in the U.S. Closer to home, the ripple effects of these tariffs are already being felt. At the North American International Toy Fair in New York City, industry insiders warned that escalating tariffs, particularly on Chinese imports that make up around 80% of the U.S. toy market, could lead to higher prices on everyday items. For American families and small businesses, even a modest increase on individual items could add up, potentially costing consumers an extra $200 to $500 during the holiday season. Stay informed with United UK. From global trade tensions to the microeconomic impacts felt by families across America, today's news underscores how interconnected our world truly is. With each new development, the stakes continue to rise, affecting economies, markets, and everyday lives around the globe. If you found this comprehensive breakdown helpful, please subscribe to United UK and click the bell icon to receive real-time updates on the financial news that matters most. Stay tuned, stay informed,